was talking to a gentleman not long ago in the gym, and he said to me, yeah, I tried my hand at stocks during the pandemic and I did okay, but I sold. And he says, I really don't understand the stock market, man, so I just stay out of it. And this is the attitude of most people. Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. So what do I have for you guys today? Well, one of the main problems with stocks in the stock market is, forget the analysts. Of course, we understand that the analysts are lying and they're beating it down to where we get to a certain point. They shake off the weak and they buy low and then they pump it up. And as it goes up, people keep jumping back in. Oh my God, I'm missing out, right? FOMO. But majority of people don't even know about stocks. They don't go on YouTube. They don't go on financial editorial stations, etc., etc. So they just buy stocks like this guy in my gym. He sees the stock price go down and he panic and he sell, or he sees it goes up and he gets happy and he sell. And he doesn't understand the fundamentals. He doesn't understand who's the CEO. They don't do any research. They just look at a stock on their phone, and that's what I used to do. So you either sell too early or you sell too late or you buy in too high. And then they pull the rug out from under you, like what's happening with Tesla now. They're pulling the rug out little by little. So listen to what just happened. This news came out yesterday on Zacks. NIO is down 31.24% in 4 weeks. Here's why you should buy the dip in NIO. And this is from Zacks. Remember I told you guys that the sentiment is starting to change. So NIO has been beaten down lately with too much selling pressure, according to this editor. While the stock has lost 31.2% over the past 4 weeks, there is light at the end of the tunnel, as it is now in oversold territory. So they believe it's oversold, meaning it's lower than what the share price should be. And Wall Street analysts expect the company to report better earnings than they predicted earlier. Are you guys listening to this? Okay. Of course, when they report earnings right around that time, don't be surprised if the Western media come in at that same time and put out news saying the China economy is slowing down. It went down 1% last week. Watch. So, excuse me guys. We use relative strength index, one of the most commonly used technical indicators for spotting whether a stock is oversold. This is a momentum oscillator. So technically every stock oscillates between being overbought and oversold. Right? So they say it should be in the middle, which is true. It shouldn't be overbought or oversold. Irrespective of the quality of their fundamentals. And the beauty of the RSI is that it helps you quickly and easily check if a stock price is reaching a point of reversal. So by this measure, if a stock has gotten too far below its fair value just because of unwarranted selling pressure, like with the shorts, panicking people, investors may start looking for entry opportunities in the stock for benefiting from the inevitable rebound. Let me say that again. Investors may start looking for entry opportunities in the stock for benefiting from the inevitable rebound. Now, two things can happen. One, it starts rebounding because now the sentiment is changing and they realize it's oversold. Not realize, they already knew this. They did this on purpose. But also it will get to a share price where huge investors, a couple huge investors will come in and buy up so many shares, even perhaps the company, and create a short squeeze. This is why I told you guys the last time NIO was tanking like a knife and it fell all the way down to less than $3, I kept buying. At that point, it was scary because the company was almost going bankrupt. Now you have nothing to fear but fear itself. So why are you panicking? Now, so these are the scenarios I'm looking at. One, the share price gets so low that huge investors, maybe Abu Dhabi boys, maybe the company itself, maybe Alibaba, maybe one of them come in and buy up a whole lot of shares and create a short squeeze, or some huge news will come out soon, whether it's the BYD partnership or some other huge news. Of course, we know once the sub-brand is released, perhaps in the end of February, it's going to, and we see the kind of delivery numbers, it's going to spike. Of course, our earnings, I believe, is going to be in the end of February as well. And I keep saying this, as the months go by, and we come to the next earnings call again, and we see how much revenue we're making from swap stations now. I showed you guys how much we over 37 million swaps. We just passed 37 million. And I think we're doing 10,000 a week now or something like that. I forgot, my buddy was telling me. However, like every listing tool, RSI has its limitations and should not be used alone for making an investment decision, right? Because you also have to look at the fundamentals. You also have to look at future projections. This is the key element that the shorts are hoping you do not remember, and I'm here to remind you of that. They keep saying, oh, they're not delivering, they only delivered 165,000, and we're delivering more cars now than Tesla ever did in the same period, but yet Tesla's share price was already over $200 a share. Food for thought. Now, the shorts also come on to make you think that the company is trash, not showing you and not explaining that the stock is way higher. The delivery numbers and what the company is doing is way extreme past what Tesla ever did at that same point. And they will hope that you forget, because people have short-term memory. They hope that you forget that you're investing based on future projection, based on what we're doing with our partnerships, with our swap stations, which they remember. Do you guys remember how many times they came out bashing me saying, oh, swap stations are a waste? And now they're all trying to do it, right? They tell us the phone was a waste of money, and now other EV manufacturers are doing it. Guys, this is why I keep telling you all. We are investing, when you invest in a new startup, you're investing based on future projections. If you come out and show me what product you have and you're getting ready to make it and you have all the ingredients, I am investing based on, yes, this is going to be a good product, and I'm investing based on when you start selling the product. Anyway, so the RSI reading of 27.32 for NIO is an indication that the heavy selling could be in the process of exhausting itself. So the stock could bounce back in a quest for reaching the old equilibrium of supply and demand. This technical indicator is not the only factor that calls for a potential rebound for the stock. There is a fundamental indicator as well. A strong agreement among selling side analysts covering NIO is raising earnings estimates for the current year has led to an increase in the consensus EPS estimate of 18.6% over the last 30 days. And an upward trend in earnings estimate revisions usually translate into price appreciation in the near term. So this is when they're saying the loud things out, when they're saying the things they're supposed to say quietly, loudly, right? But a lot of times they do this on purpose too when they're ready for the stock to go back up, because they manipulate the sheep. They don't manipulate the lions. We understand that this should already be a $300 price range. This stock should already be, yes, Money Making Mitch is saying it, $300 based on future projections. Based on all that we're doing, all the countries we're going to go into this year, based on the sub-brands, brands, not brand, plural, brands. So, moreover, NIO currently has a Zacks rank of 2, which is a buy, which meant it is in the top 20% of more than 4,000 stocks that we rank based on trends in earnings, estimate revisions, and EPS surprises. This is a more conclusive indication of the stock potential turnaround in the near term. You can see the complete list on the Zacks rankings. So you guys, if you want to find this, you can go on Zacks rankings. I get this on SoFi platform for free. I'll leave the link for the SoFi platform. I'll leave the charging map link again for you guys to look at. and keep on your phone. You can download, keep on your phone. It's beautiful to see how much money we're making every day. So I hope that you guys found this video to be not only informational, but especially informational and inspirational, and to understand that this year is the year of the lions. I've said it before. I said it since last year. If this video did that for you guys, don't forget to hit that thumbs up. Please, guys. If you haven't yet subscribed, you might want to think about doing so. Because in this channel, we have that warrior mindset, like 50 said, where we get rich or we die trying, guys.